In today's video, traders, we're going to be talking about an extremely simple yet pretty effective trading strategy using primarily candlestick patterns and something that is so simple that it might just work. Let's go ahead and break down what exactly this concept is, as well as how we can actually trade this right now. So hello traders and welcome back to the channel. My name is Nick. I make all sorts of content here on YouTube for Forex traders, content about kind of my live trades themselves, breaking down those concepts, as well as strategies like the one we're talking about today. If you are new here, please do me a favor, make sure you subscribe to the channel down below and click the notification bell so that you can tune in to future videos. So let's talk about this concept. This concept that I'm about to talk to you guys about is so simple that it just might work. And what I find is that in my own trading, the more simple things can be made, sometimes that's the most effective concepts, right? A lot of times people will tack on, 10 indicators on their charts, looking to make things really, really complicated to try and find some sort of magical formula that's going to tell them where the market's going. What I found over the years is that the less I put on my charts, I actually find it to be more clear or clarifying about potential setups and direction. This strategy is possibly the most simple one I have ever seen. So let's break down what exactly it is. First of all, before we get into examples and stuff, we need to actually talk about what this idea or the logic behind this concept really is. What we're going to be looking for is we are going to be looking for two red bars in a row. Okay. Very simple, right? Nothing fancy here. Two red bars in a row, followed by two green or blue bars in a row. And that's it. That is all there is to the start of this strategy. So let's go over this. Very simple, I know. Two down, two up. And the contrary, which is going to be two up, two down. Okay? Forgive my messy drawing. I'm doing this with a mouse, but you guys get the point, right? So we have two up, two down, and we have two down, two up. Now, we need to expand on this a little bit more. What is this actually telling us, and how can we take a trade based off of this? Well, first of all, what is this telling us about a market? Okay, let's talk about the logic here on the downside. What this is telling us is that the market is pushing lower, right? We have a series of a downtrend, right? Let's say that we have more bars behind this. The market is trading to the low side, and we see these two bars down and these two bars up. Well, what this tells us, guys, about the market participants in this area is that as price came down into this significant low, we saw a sharp rise in demand, or buyers stepping into this market and pushing price the other direction. It's almost like when something kind of hits against a wall and bounces back off, right? It's almost like we've seen a strong rally or a strong rejection of price to go any lower. And what we could see with the follow-up here is a continued rise off of this concept. So this, in fact, would be then a buy scenario, okay? Very, very simple. We're keeping this very straightforward on purpose because, again, some of the best concepts that I've found in my trading are simple. So we have this concept where the market comes down very sharply. We nudge up against a level here and we turn around. Well, how could we trade this? Well, maybe this could be a potential buy setup. Not a guarantee, of course. We never have any guarantees in the markets, but potentially a possibility of a full-on reversal or a bigger reversal to the upside in this case. Let's talk about the flip side. Let's talk about the sell scenario. We have a market that is pushing higher, right? Buyers are pushing this price up. Buyers are in control of this market. Let's say we have a push to the upside overall. And as price starts to round off at the top, and that's kind of the concept here, is we're seeing price round off, right? We see a sharp reversal at this level here, right? So this level has shown us sellers have stepped in and it looks like the trend may be starting to go bearish. Now, the idea here is that by just doing the two down, two up, right? Or the two up, two down, we're trying to get involved in the move. The future direction of this move may be up in this case and it may be down in this case, riding the start of a new trend. Very early, very simple. This is what we're trying to do with this concept. We're trying to say that if the market starts to turn around, we could jump in, try and catch some of that momentum and continue the direction that the market is starting to head in. So let's take a look at some examples. This might help us to clarify this concept. And what I found is when I was testing this concept out, I started to see these concepts again and again and again. Let's take a look at some examples here. We're taking a look at gold here. I know everybody likes to trade gold. We're looking at the daily chart. And to be honest with you, this concept is kind of a new one to me. I haven't spent a ton of time testing or back testing this concept, but the tests that I have done seem very promising so far. And so if you guys have ideas, make sure you comment them down below at ways that you could make this sort of concept even more effective. But let's tap into this concept. Let's see if we can spot some examples. Well, for starters, you have right here is a 2 up, 2 down. Right? You can see the market rally to the upside, very quickly faded, and sure enough, we had some follow through. So that could have been a sell setup that would have worked great. But take a look here. Now we're not getting fancy, right? We're not looking for an exact identical symmetric pattern. We're keeping this very simple, right? It doesn't have to be perfect cookie cutter. The idea here is that we simply have 1 red bar, 2 red bars, right? 2 red bars, and then 2 green bars. And all that is showing us, guys, if we showed this on a line chart, let's take a look at the line graph really quick, because this might give us an idea, again, of what's going on. Look at this. All we have right here, price coming down, sharply starting to head back up. And look, we had the continuation beautifully. And so by using this concept of those 2 candles, right, the 2 down, 2 up concept here on the candle, look at this. We had 2 down here, followed by 2 up. And sure enough, we see a rise in price, a nice bullish trend start to go. So then we can kind of test this concept and keep going forward. Take a look here. Did we have one right here? No, we didn't, right? Because we only had 1 green, 1 red. And so that does not count as a setup. Here we didn't get a setup either. But let's see if we can go a little bit further. We might be able to see one. And there's another beautiful one right there. Take a look at this. 1 green, 2 green, 1 red, 2 red. What does that mean? That means it could be a potential short setup. Now, where would you sell? Where would you put your stop loss? Where would you put your target? This is going to obviously be an important decision to make in any trading strategy. Now, the one concept that I've been playing around with, and again, feel free to test this concept out yourself and see if you can find a strategy entry that you like. Sometimes people will add filters to it, right? So adding the trend direction, adding an RSI, something like that, right? So that's something that you could play with around as well. But to me, what looked kind of cool was the idea of taking a short trade in this example, putting a stop just roughly above the highs there, and looking for a 2 or 3 to 1. Here's a 2 to 1, you can see. And would we have gotten a 3 to 1? Let's see. So there's our 2 to 1, right? It says 2 to 1 there on little tool here on TradingView. Let's see if we would have gotten a 3 to 1. Would we have gotten a 3 to 1? We would have just perfectly hit a 3 to 1. That's awesome. So that's the concept there, right? Is you have a market turning point where you could potentially get involved. And look at this. The cool thing is, guys, this happens so frequently that I'm almost convinced to start testing this concept more and look for some sort of opportunity. Now, specifically in my case, what I've been testing is the daily chart with this concept. I really like the daily bars. I think you get some really clean market direction. And what this really is cool to me is like you almost have this concept of the market is moving part of the week up, and then we start to see a reversal, and we could catch that into the next week by using the daily chart. That's just an opinion or just an example of one setup that I saw. But let's go a little bit more detailed and see if we can find some more examples. I see one right here. Take a look at this. 1 red, 2 red, 1 green, 2 green. This would be considered a buy trade. Nothing complicated there, not keeping it extremely, keeping things extremely simple here. We have a nice little trade continuation. So let's do our same principle. We could have said, if in this case, you have to be careful, right? Because if you're going to be taking a buy trade after price has moved, in this case, price has moved quite a bit to the upside already. So if we put stops underneath here, could that have worked? It looks like it might have still worked out. We could have still gotten a 2 to 1 there. A 3 to 1 would not have worked out, it seems like, unless price rises from there. But you see, for the most part, in this case, we have this scenario. So this is where it might have some room for you to kind of test out entries as well as your stop outs and your targets. For example, you could use an X number of pips, right? For example, let's say that in this case, we use 75 pips there, right? And then we do, let's say, a 2 to 1. That would be a 150 pip target, which would be one way that you could trade it, right? So you could use a set number of pips. In this case, we have, again, 75 pips of stop loss, and 150 pips of take profit, right? So this is something where, again, you'll have to take these concepts, go employ them and find something that works for you. But to me, I really just, for starters, really like the topic or the concept of finding turning points, increasing our timing abilities by using this concept. Look at this, another cool example right here. I love this setup right here on gold. You can see we have this scenario. There's our 2 down and 2 up, right? Clean chart pattern. It is not complicated. A lot of times people want to get really super complex with their concepts without, just not acknowledging that sometimes the best things are very simple. So in this case, this would have been a beautiful setup. Using structure, we could have even had a really simple trade there, right? Just under structure, we could have gone for a 2-to-1. Let's see what that would have been. That's a 2-to-1 right there. Beautiful trade right there. Again, would this be a setup? No, this would not be a setup. Let's see if we have any other trade setups. Of course, it's not going to be 100% perfect. No technical strategy is. For example, let's see, we can find, here's one, right? Is that a red bar? I don't think that's a red bar. I think that's a green one. You can see if we keep going forward, you'll find examples. Here's one, right? Here's an example where things would not have worked out. 1, 2, right? 1, 2. So no strategy or technical entry is going to be perfect, but I wanted to kind of just get started on this topic with you guys because this might be something that someone really likes. Someone likes that concept of keeping things so simple that it just might work, right? So there's some ways that you can add a little bit of, maybe not complexity is the word, but confluence, right? For example, if you really like support and resistance, then maybe you could combine things like support and resistance, right? So if price comes down into a major level like this one, right? Maybe that's an added filter for you to take a buy trade here, right? So you only take a buy trade if in fact it holds a level of support very well, right? That's one thing that you could try adding on to your strategy. Here's another example. You could add a trend filter. I have here on the chart a 50-period SMA. What you could do is you could say that you're only going to look for buy trades above the 50-period and only going to look for sell trades below the 50-period. That's another thing that you could look for, right? You could also combine, again, I mentioned using an RSI, for example. Let's say that, let's see if we can add an RSI here. We'll go to built-in, we'll go to RSI, relative strength index. We have the 14 period, right? Let's say that you decide, okay, well, I'm only going to take trade setups if they do in fact read overbought on the overall market, right? So in this case, we were pretty close, but not quite there, and we didn't get our candlestick pattern set up, but you guys hopefully get the point. The idea here is that you can add other things onto your trades to potentially give yourself a better edge. And again, at the end of the day, it comes down to finding what's going to be comfortable for you as a trader to actually stick to the plan. But guys, I hope you enjoyed this concept. If you did, please give the video a thumbs up down below. Make sure you check out some more of the videos here on the channel, and we'll see you next time.